Now, our entity level controls, this is a concept here in our integrated audits. Entity level controls exist independently of the audit. They're one of the top levels of the top-down approach, which we will see in a second. I'll give you a quick little preview here, our top-down approach. Wanted to just touch on these entity level controls first, but this is a method to determine which controls should be tested and what controls should we be testing. Entity level controls are those that have a pervasive effect on a firm's internal controls. Entity level controls are just these overarching, super important controls. Now, let me give you two examples. Let's say we've got I'll just give you one of these, a whistleblower hotline. That's pretty important because if there's any fraud at the company, you want a hotline set up, an anonymous phone number, so that any employee can call in and say, hey, there's fraud. I see it. I work here anonymously, possibly get a reward, and not possibly, I mean, this is getting into SOX 2002, but they should be free of retribution. They'll be compensated if anything happens to them. So that's an overarching entity level control, like over the whole entity, pretty important. Now, a small control might be having a senior accountant within the company reviewing the staff accountant's work. That's not an entity level control. That's just for the accounting department. That's just at a lower level. So that's what we mean when we say entity level versus non-entity level. Variance analysis reporting, important. We're taking variance over everything in the company. If all of a sudden the cash balances plummet, that's a big swing in variance. That's going to be a red flag. We see that our debt is ballooning, or maybe someone's taking out debt on behalf of the company, doing something risky with it. Executive committee and its process for assessing risk. Any high-level board of directors, management, executives, these are going to be top-level, entity level as well. Board of directors monitoring the audit committee, important control as well. These are fiduciaries for the entity. Our code of conduct for the whole organization, going to be important. And management monitoring operations, all of these and more. These are just some of the more common ones. These are going to be controls that are overarching for the whole entity. Controls such as those over specific accounts. Saying we've got lower levels where we're just focusing on cash, or maybe just the accounting department, or maybe just the factory or the warehouse. Those are non-entity level, and we're not going to assess those in this process just yet. Now, this top-down approach, specific to the integrated audit, it's a method to determine which controls should be tested. We begin, so it's top-down, right? We're starting at the top and looking down. Begins by looking at the entity level overall risks. So, and I think that's fair if we think about it. You probably don't want to just look at the specific accounts first, the small individual things. First, you want to see if there's any overall inherent red flags to the whole company that are just blatantly affecting everything. Because maybe cash individually looks good, maybe debt individually looks good, but we don't have a solid board of directors, and that is going to affect absolutely everything. We begin by looking at entity level, then we move to entity level controls, and then we drop down to those significant accounts, the specific accounts and disclosures, which may affect risk more adversely. And why do we refer to it as top-down? As I mentioned, it begins with the highest level at the company and moves into the individual controls as it moves along. We're identifying entity-level controls. We're assessing the whistleblower hotline, all of those things, how management reacts to things, then identify significant accounts, disclosures. Maybe the company doesn't really deal with accounts receivable. Somehow, maybe they only have cash coming in, so we wouldn't really assess accounts receivable. Maybe there's no PP&E. It's a completely service-based company. That would not be a significant account then. Then we understand likely sources of misstatement. If we're dealing with high levels of inventory, yeah, it's probably likely that a likely source of misstatement might be theft of inventory or just not counting the inventory properly, something like that. Or if documents are not received and processed properly. Lastly, we're going to select controls to test to see how this whole process moves along.
Hey there! Are you ready to not only pass your CPA exams, but truly understand and enjoy the material while studying? I know it seems impossible, right? Especially to enjoy the material? We'll do it together. Tap into the power of CPA.examprep.ai, where we've got personalized quizzes, multiple choice questions, memorization guides, flashcards, simulations, all tailored to your learning. Our adaptive study planning puts you on the fastest path to success and lifts you back up if you fall behind. Avoid wasting your precious time and money attempting an exam with a low chance of passing, because who wants that? We want to get you through this process as quick as possible. Our exam readiness prediction lets you walk in with confidence, knowing that you're prepared for success on exam day. Thankfully, there's no payment method needed to get started, so why don't you come join us? Visit cpa.examprep.ai and let's achieve your exam success together.